Our special guest today is Tracy Jennings. Tracy's has over 33 years of experience with PwC, where she was a tax partner there, and has just started her own new tax and accounting firm, Digital Tax CPA, on April 1st. That's April Fool's Day, Tracy. I don't know if you planned that. But anyway, she's excited to bring her deep tax expertise and passion for technology to build a dedicated tax and accounting practice focused on delivering innovative solutions and excellence in client services to clients big and small. And so we're really happy to have you here. And also to note that your favorite Canadian artist is City and Colour. Great artist, just sold out a bunch of nights at Massey Hall. Very exciting. I'm really personally thrilled about this because finances have never been my strong suit. And this is something that I've really tried to take more of a lead on in the last few months. And I'll tell you why in a minute. But before that, I do that, I just want to go over for our attendees at home the topics that we're going to be covering. We got 5 sort of buckets that we're going to look at. So if you've got a question that's burning to ask, maybe you'll be able to sort of see what bucket you might want to wait for. So the first one is really finding a system and spending that $15 a month. And Tracy will tell us all about that. And then budgeting, spending what you have and knowing what you've spent. And then, of course, for self-employed or for artist entrepreneurs, tax, paying only the tax that you need to pay, but paying it. We're also going to go into some HST questions. And then finally, incorporation, when to incorporate or not. It's a hefty tall order, but I think we're going to get there. I'm excited. And I wanted to just share beforehand, Sarah Hashem's going to send out a poll to everybody just so we can get a sense of where people are, our participants in the industry at the moment in terms of their careers, just so we can see kind of what kind of an audience we have today of artist entrepreneurs. So for me, Tracy, again, this is just so timely. And personally for me, I just wanted to share a little personal story because as an artist for 20 years in the Canadian industry, I had a really hard time kind of figuring out how to get a handle on my finances. I would get home from tour and I would pay all my bills, probably late, and then I would have nothing left over. And it would just be this cycle of feast and famine, sort of always 100 and never 1,000. And I guess I sort of just assumed that was what you do. And I didn't really look too deeply into it until I decided, and actually when we were thinking about a webinar like this, and I called a credit counselor to try to deal with my own situation and really suck it up and shine that light under the bed and look for monsters. And I dealt with a really great person at Credit Canada, which is a great service. There are a lot of them out there. That was one, very respectful. And what we ended up finding out was that somebody had opened a credit card in my name a few years ago and completely ruined my credit. So I had assumed it was just me and my bad choices as a band member and a Canadian musician, but actually it had been probably that as well. But it had also been somebody who had done identity theft. But what was so amazing was getting that info and coming back from that and realizing that I had the power to reestablish credit, to figure it all out, to start actually from the beginning and getting this all clear. And so again, I think number one, just because we may have people who are just starting all the way up to people who are veterans, if you could just maybe explain the difference between a bookkeeper and an accountant, and also just sort of tax return prep and where you fall and what we need.
Thanks, Miranda, and very, very happy and honored to be with someone so creative. So the problem on the tax side is that the reason I love doing work in the media industry is I love the creativity, but I am not creative. So what I can say is at least I can be creative on the tax side, but it's kind of not the same. So it looks like in the audience we have a mixture of half that have been around. So a lot of these topics will be maybe best practices and tips that they'll get. Some new to the business that hopefully we can get you off and running on the best foot. And a number that have been the music and around for a while that maybe they can share, some of the best practices and learning as you go through. So if you kind of look at my first overall kind of message is spend $15 a month. That's kind of what I'm going to say. You can buy McDonald's, you can buy a bottle of wine, but I'm going to say, hey, buy a package like zero. And what I mean by that is maybe so those who are out there that can actually go and get started on the right foot and buy a package because they're a little bit savvy on the accounting side. Others, my message is really just to start making sure that you're tracking your expenses. So it's really, really important when you look at managing your business, because you are a sole proprietorship. You're starting your own business. So you want to make sure you manage it so you know how much money you're actually making, which is the difference between your revenue and expenses coming out. And that's the amount that ends up going into your pocket at the end of the day. But you also have obligations, because not all of that money is yours. So you're going to have to pay tax, and some of those expenses are deductible or not deductible. So getting off on the right foot and ensuring that you actually have tracking is really important. So what's the role of a bookkeeper in that tracking versus, maybe an accountant? And I can maybe share also in kind of the firm that we're offering is like, I can talk a little bit about the services that you provide at the bookkeeper versus the accountant level. But the biggest role of a bookkeeper, or you could play the bookkeeper role, is to make sure you have somebody that's tracking your costs. And that's really looking at getting a system in place and knowing what expenses are deductible and what expenses are not deductible. The accountant role is really putting the financial statements in, and once you have it. But I will tell you from my experience, you can't really do an accountant role or do your tax return if you don't really know what it is that you spend. So it's kind of like going back to the very first thing, is making sure that you're you're tracking it.
Mm-hmm, mm-hmm. So you mentioned Zero. That's one of the companies that's the company that you've done a lot of research in market, and that's the company that you would recommend to use for the system. And it's all about getting a system that works for you, if that's correct. And some people use FreshBooks, and again with Zero or FreshBooks, these different products, you can invoice immediately from it. You can track incoming as well as outgoing. Is that correct?
Yeah. I think it's picking a system. So the reason, I guess, in our digital firm, we selected partnering with Zero. We also partner with QuickBooks, and there's also a number of emerging solutions that you can provide. But the most important thing is to be able to get set up with something that works for you. So the reason I kind of will push you to spend the money a month and get set up is, with today's technology, you can set up your bank account, and it can automatically put the transactions in and make your life a whole lot easier. So as opposed to, looking at paper statements and the time it takes to sort through the paper statements. And maybe, if you're like me, I have a good memory, but sometimes it's not a long memory. So if I just throw it all in a box, I have no idea, if I have a receipt or don't have a receipt. So it's kind of just making sure you get yourself organized, and you can make sure that you can track it, and you get some system that works for you. So in terms of that tracking.
That's great. Yeah, I always feel as though on the road, I would keep receipts, or I would, put a little scrap of paper where I paid cash and think, I'm just going to remember what that was. And it's just like trying to remember when you think of a song in the middle of the night that you're going to write, and then you think, oh, I'll remember it in the morning. You never do. So,
yeah.
Okay. So tip, making sure that you have a system that works for you, and to spend that $15 a month on your system to make sure that you're also holding yourself accountable, I guess, by investing in the system itself. You're kind of keeping yourself a little bit, I've spent the money, I better be using it. It's like a gym membership.
Yeah. And sometimes it can be, you might not have the system yourself, because if you're, some of you out there might say, wow, accounting, that's kind of like two heads. So, if you get a good bookkeeper and an accountant may do the same all in one, like we do, but the bookkeeper can use their own system. So you don't even have to worry about that. My point is that you get it on a system, and you're not using kind of Excel or boxes or paper.
That's great. And it's also scalable. I like that a lot. I want to back up just a minute because just setting up a kind of business, just the different kinds of business that you mentioned, sole proprietorship. There are other types of businesses that you probably work with. Do you want to just sort of do a very glossary overview?
Yeah, that's a really good point, and it gets into our next tip around tax. But if you're doing work, so the reason I went to a sole proprietorship, because you're an individual and an artist and you're starting your own business and you're doing that individually. So that's different than being an employee where you're working for one company and reporting to them. The big difference between those two is in an employee, they give you the paycheck and they take the tax off and you just you have it net and you don't have to worry about that. You also don't get to deduct as many expenses, which we'll come to in a second. So when you're a proprietorship, all I really mean is you're starting to do business yourself, like Tracy Jennings as Tracy Jennings CPA, Miranda Mulholland is Miranda. And the reason you might want to start business in your own name and is because you're going to start to incur expenses first. So, having those expenses personally, where maybe you can start to offset other income, is actually a pretty effective tax strategy. And I'm going to say the other options we can talk about, and we'll come back to, incorporation or partnership. Partnership just means that, hey, Miranda, you and I are working together, so we're going to share the profits between you and I. That's kind of really what a partnership is in joint ventures. So it's kind of just a difference between whether you're carrying on business through an incorporated vehicle versus doing so by yourself.
Mm-hmm. I remember when I set up my band with Andrew Penner. It's called Harold Fair. We're a duo, and we had to set up all of our accounting and our bank account and everything. And he said it was more paperwork than getting married. I was just so much to be an entity like that, a partnership. You mentioned something. I mean, just thinking about other benefits and the personal visa versus the business visa, mm-hmm. and maybe just sort of give us those two examples of maybe there's a benefit.
Yeah, and if I could give those that are just starting out, those who are around would know this, but it's much easier to track your expenses if you have them segregated somehow. So my easiest tip that you can do is to set up a separate business bank account that you're only using it for business purposes. And at the same time, consider getting a separate business visa. And the reason I kind of talk about that and is relative to a visa is just borrowing money. And the problem with a visa is that sometimes you don't really, it's too easy. You don't really have the accountability of, money coming out of your pocket as you do. But with a visa, if you're not paying it off every month and it's your personal visa, the interest rates are really, really high. So what it's going to mean is it's really going to cost you a lot in the long run. Whereas if you look back and say, can I set up a business visa? The business visa rates, you can kind of use it almost a little bit of a credit loan. So, depending on your financial situation and where you're at in that process, but that's a good point. And then trying to use that business visa only for business expenses makes it super easy to do the tracking that I was mentioning.
Yeah, amazing. And we're going to get into tax in a second. But before we do, Tracy, you've actually created a chart of accounts for for all the people who are here today. So Quentin from Music Canada is just going to put it in the chat and people can download that. And I think that's going to kind of guide us through some of the things that we're going to talk about in a minute. We've got a question that we will be dealing with on the very last section, which is the when it's time to incorporate. And I believe it's from celebrity accountant Jay Gould, unless there's somebody else with the same name. But thank you for your question. That's an excellent question. We will be getting to that. It's funny, when I was in grade 3, and I don't know why I remember this, it was my French class, and it was taught by a woman named Madame Kennedy. And I don't know what she was going through in her life at the time, but she came into class one day and told everybody never to buy furniture on credit. And I just thought that was so strange to tell a grade 3 class, in French no less, but it's always stuck with me. And I think this actually kind of ties into spend what you have and know what you spend, and this budgeting, which of course is extremely important. So thank you, Madame Kennedy, en français, for that excellent tip. But maybe let's sort of cover that budgeting aspect and and people can follow along at home on the chart of accounts as well.
So if you kind of feeds into first is budgeting is just kind of figuring out where you're going to spend your money before you do, and holding yourself accountable to that spending. But what I did in when I sat down for this webinar is I thought I'd give you some practical tips that the participants can take away. It's got a few more accounts on it, so it's illustrative. But what I did in the expense accounts, you can see, is I've actually categorized those expense accounts the same as what you do for tax purposes at the end of the year. So I thought maybe we could cover two things, Miranda, is one thing that's always confusing, or people that are non-accountants find very confusing. So I might touch on that, is what is an expense, and can I fully deduct an item for tax purposes in the year? So I'm going to equate it to you can test my lack of knowledge on the musician side, but if you bought a Denver classic guitar versus a Gibson 2019 Hummingbird Cherry Burst. So can you tell me what you think, Miranda, might be the difference between those two? If you can't, I looked it up.
Yeah, as a violin player, I would say that the second one, which sounded more fancy, was more fancy.
Exactly, yeah. So the second one costs $5,000. Your violins, I'm sure, are way more expensive. The Denver classic guitar is $129. So you kind of say, wow, if I've spent money on something that I can see, and I'm not going to throw it out at the end of the year, I actually can't deduct the full cost of that in the year. So that's kind of my biggest thing, is that you're going to get to take a deduction of that cost over time. But you might say, wow, I'm $120. Why would I bother? And I'm going to say yes. Practically speaking, if you have something that's a fairly low cost, then you might arguably deduct it in the current year. So it's kind of understanding the difference between when I can buy something and fully deduct it to save my tax in the current year versus claiming it over a period of years, versus the expenses that I kind of incur. The second piece I just want to highlight is when you're running your own business. I'm not a musician, but if I was a musician or I'm an accountant, I'm going to say, I get started in my business, what can I deduct? So the types of expenses, and I'm going to say use your gut a little bit in this regard, is did it really pertain to the business? So if you've incurred expenses that you needed because you're trying to get your label, you're investing sometimes really in lessons to better your performance, you're investing in rent from your office because you're actually carrying on your own business. So those expenses really you're incurring, those are really business expenses. So it's kind of really understanding the difference between business expenses versus kind of what you might argue are personal expenses. And sometimes the line is kind of gray. So I'm going to say just make sure that when you are deducting amounts that you can really support, that amount. And if you get overly aggressive, the tax authorities will come back and you'll have to defend it. Yeah. They might not agree with you.
Yeah. And I think this goes back to your point number 2 about budgeting and being able to keep an eye on what's coming in the door, what's going out as necessary, things you have to pay. And then also knowing when you have a little bit of overhead that you could put into buying Gibson SG or whatever fancy guitar that was. And I wonder too, on the budgeting side, just to dabble a little bit, just because, again, very personal with my credit history, but the understanding the impact of debit versus credit and figuring that out. I mean, I know that's very basic for most people, but I'm 40 years old and I'm still figuring it out. So if you want to just sort of highlight that would be great.
And then when you say that, do you mean in terms of a debit or credit? Because you are talking to an accountant.
Right. Oh dear. Okay. Just the importance of setting a budget, understanding the impact of debt, so credit cards, et cetera. Yeah.
That's what I thought you meant, but
watching my
you're absolutely kind of right in a whole bunch of different areas relative to understanding, but in setting a budget, it's important to know what money you have come in and make sure that your expenses that you're going to incur can be paid out of that money coming in. And if they can't, and you're actually borrowing, it's really important to understand what your payback scheme is. So that's where I say, and this is even so much more important, Miranda, today, I guess, in the world of, credit cards and transactions, where it's so easy to just spend the money and really find out at the end of the month. Lots of examples there in terms of my son on Uber Eats. I found out yesterday that he spent $250 in one day on Uber Eats. I just can't understand that. But he had no idea that that's actually how much money he spent. So it's kind of if you're using things like credit cards, it's really important to know that that is just borrowing from the bank, and eventually you can't spend more than what you have coming in. So I think that's a really hard time right now, because we've just come through COVID. A lot of the artists in particular have been hit hard because there's no live performances. So you have to do what you can in circumstances where you need to make ends meet. So it's probably more of an issue today than it was, probably a year and a half ago.
Yeah, no, absolutely. I mean, our community has just suffered so much. And again, sort of startup costs, it's not even exactly like, starting a business, but restarting a business, reinvesting in those plane tickets to go back to the tours that we had booked a year and a half ago. That's really difficult. Another funny thing that sort of changed a lot for musicians is just that, a lot of times we would sell merch, which would be that where we'd make, a lot of our gas money or income on tour. And again, that's a lot of cash at the end of the day. And you have, of course, now no one carries cash. And so, we'll all have to invest in our stripes or the little contactless things, so we can start that up again. Again, more overall costs, and we're going to have to incorporate that into our budgeting. I know that it's sort of the millennial myth, or maybe it's not a myth, and you can answer this. We're sort of told that we can't buy houses because we've been eating too much avocado toast. Have you seen, like in your experience, some of these surprises where people have, once they take scrutiny, look at things and they think, oh my goodness, I actually can't buy a house because I did spend thousands of dollars on avocado toast last year?
Yeah. Well, I probably share a bit of it's not avocado toast, but, I think in this situation with COVID, that I do have a few situations. So personal situation to me is someone who was a nurse who hurt her back. And you can see that there was a big article on CBC last night relative to how hard it is to be a nurse for a long period of time. And they had to go on sick leave. But the problem was the medical company denied their sick leave. So then they were left with nothing. So that's a really tough situation where you'd say, wow, they've had to spend, it wasn't avocado toast. It was, they didn't have enough money to make a living because they were in a tough hardship situation. So in those situations, I'm going to kind of say, if anybody's there and you might feel like that's a huge burden, especially in today's environment, is go and talk to some individuals to get the right support. So, and there are ways to lift that weight. Like if you're in too deep already, there's professionals that actually can help you look at either doing a negotiation with a bank to get them to settle the debt for a lesser amount, bankruptcy. And that's not really the end of it's not like a bad letter word, if you might say it. It's kind of something that in my career, I've seen lots of people end up going through bankruptcies, whether they're a profession that's still making a lot of money or not. So the most important thing is if you get in that situation and your credit is overwhelming and you haven't been able to do it, to seek help, because there's a way of lifting that weight.
Yeah, I think that's a really good point. And again, while I went through sort of my strange financial journey earlier this year, I felt there's so much stigma, personal weight that's attached to finances, and there's a power in understanding that no matter what at the end of the day. And so even when I went and talked to somebody and booked a meeting with the credit counselor, we walked through everything, what comes in the door, what goes out the door, what my goals were. It started to fall away, all the stigma and all the things I'd built up in my head that, this was just And then to find out at the end of the day that it was actually, not even me, was kind of amazing and super revealing. And it just, caused me to also think about this. If we're talking a little bit about credit recovery right now, it's just about keeping on top of Equifax, keeping on top of TransUnion. And there are ways to do that that don't impact your credit score, just to keep checking in case of fraud, especially for artists who we travel a lot. There's a lot of online transactions going on. You're in a lot of cities, and the possibility just sort of ramps up. So that's just something I think that's really important as we talk about budgeting. We talk about all those things, is also just keeping good financial health in that way. And we've got a question from Ariana, and I'm just going to go to our second part of the question first, which is just about how can an independent artist find, a business manager, let alone afford one, when it's so hard right now. And, we've been off the road for a year and a half. So, what are your thoughts on that? And sort of, do you think that artists, we can do it ourselves up to a point?
Yeah. The best example I'm going to use is one of my clients that has been with me for, I think, about 15 years, since she graduated, actually. And that's kind of she's an artist that has no financial acumen at all. But what she did is she did do good tracking of costs. And when she produced her first motion picture film, for a budget of less than $70,000, I might add, she knew she had to make sure that she was very careful in the budgeting, and she didn't start production until she met her costs. So I'm going to say there's the tips that we're providing. I think if you can't afford a little bit of help, you can do a lot on your own. Just seek some of the guidance that is out there, and tracking the tracking that I've even given some support on. This simple things that you can do will help you in the long run, even if you can't say, hey, I can't really afford a full accountant. But honestly, if you implement some of the tracking processes, you actually don't need to spend that much money on the other services. Now, what a business manager does, though, is they can do the whole thing. So, that's a little bit of a broader role. Where you'd say, if you're a growing artist and you need someone to manage your whole affairs, if you can't afford to pay that, then you're going to have to do some of that yourself. So it's kind of understanding that piece. And I have a producer client that's what they did, is they started by themselves, and they were doing a lot more initially just because they had to. But in those situations, I'm going to say there's lots of people you can talk to, reach out, get guidance, so that you can actually undertake some of those activities yourself as well.
That's a great point. I think that's really, I think that works the same about getting an agent as well as and getting a professional manager, a music manager. Is you sort of have to do DIY into the point where it actually behooves you to have somebody take over, because your time could be better served doing something else in terms of a cost ratio, or that person is going to be adding to your business the same ratio or more that they are bringing in or costing you. And sort of that's a bit of a gamble, and it takes a while to kind of get right. But no, I think you're spot on. So that was a great question. Here's another one. I've been on the road. I spent 20 years, 7 years on the road with Great Lakes Swimmers, a ton of different bands all over the place, and eating out and not knowing and trying to keep my receipts. And I know now there's a lot of great apps. So if anyone on the webinar here wants to put any of their options that they use to keep track of receipts in their apps, but you're zero, would that work for that, to be on the road and be able to keep track?
Yeah, I'm sure there's lots of apps that work the same way, but I think what I like, about that program in particular is in today's age, you can have a receipt and you can take a picture of it. You get it via email if you're buying something. And with the new technology accounting, you can just email it to your accounting software, and it actually imports a lot of the data. So again, I'm kind of trying to look at ways that you can do some of that yourself, get a little bit of guidance, but not have someone who's doing it all manually. So in the end, you say it might be a little bit of effort. But with today's technologies and digital, there's a really, I think it's a great opportunity to enhance all of our skills, actually, as we kind of look at better ways of doing it that are also efficient.
Yeah, that's great. That's great. And it's like the teaching yourself how to fish rather than just buying a fish, you
Yeah.
know, kind of getting prepped.
Yeah.
Well, that gets us into super fun. So I've got my shoebox of receipts and, or I've got my app and or my QuickBooks and all these, they are Zero. And then of course, benefits of tax time. And I know we touched a little bit on that, but I just wonder sort of concept and then items and figuring that out. Help.
So I guess I'm going to say three things. One is, if you track your costs as you go along, even if you don't know whether it's deductible or not deductible. And number two, if you make sure that when you receive money as a sole proprietor, as opposed to an employee, that you know that part of that is not yours, you put it aside. And three, even though you might hate the three-letter word TAX, don't ignore it. So those are kind of my three things to do to make sure, because as long as you've tracked your expenses along the way, you can also do that tax return a lot cheaper because you've already have things tracked in the way that you need them for tax purposes. So if you give you a box of receipts and you've got all your meals and entertainment, but sometimes, Miranda, you and I went out for a drink, and then sometimes I went out with Sarah, for dinner, and then I had a business expense, but I actually threw them all in one box. Then wow, at the end of the year, it's a huge process, right? So if you did something simple, like only put a notation or put a separate envelope just for those meals that related to your business, then that issue, and you do it as you go along, then you don't have that effort at the end of the year.
Okay, Tracy, but what if we went out for dinner and then I asked you about tax time and then you asked me about my latest recording? Does that count?
That's a great example, because you'd say, hey, there's a lot of gray in, and I'm going to say pigs get fat, hogs get slaughtered. So in tax, there is black and there's white. Then there's a lot of gray in the middle.
Sorry, say that one more time. Sorry.
No, it's what I do. I use when anyone who wants to be a little over the line in the wrong way.
Oh,
but a pig does, grow and get nice and. But the old adage is that a hog does get slaughtered. So you want to, reap the benefits of the gray areas. But if you go too far, they're going to come and get you. So, know where the line is. Play within the line of reasonability. So I'm going to give you two examples. Miranda, hey, you're an artist and I'm a professional. So if I want to take you out to dinner because I think maybe you might become a client, then that relates to my business. If I was actually a promoter and you're an artist, you would want to take me out to dinner because maybe I will actually help earn your revenue. So versus, hey, Miranda, I really like you. Can we just go have fun? So that's my example of, understanding the difference between, whether or not something really pertains to your business or not.
Right. Amazing. Okay. I'll try to remember some of that. Can I get anything from this is sort of for my business versus this is just going to be a good time.
Yeah, that's
it. Okay. I'm going to write the pig thing down though, as well.
It can still be a good time though.
Okay. That's really great. And so here's another one then that's a bit gray. For example, so I live here in Toronto and I pay rent here in Toronto. As you can see, I'm working from home. This is a very concept that everyone's sort of experiencing now. So does that mean that I can write off some of my my work stuff?
Yes. Yeah. And I think it's important to note that there is a big difference in this area between being an employee versus being someone running your own business. And as you can see, this is my office. So in the checklist that we gave in the chat, I actually have listed for sole proprietor the types of costs that you can capture. But your approach, Miranda, is to really look at the percentage square foot. The technical rules are that is dedicated to your business. And And then you're going to look at your total costs that you've spent. If you're renting, it's easy. It's kind of looking at your utilities, your rent, and then you're saying, well, how much of your square footage are you using that's dedicated to your business? And then you just take the square footage multiplied by the total times the expenses that are allowable. If you have your own house, it's the same formula. It's just the difference is that in the cost of a house, I have property taxes, you have mortgage interest, you have maintenance. So, wow, that's really great. And it gets back into, oh, wow, I put a pool in last year. Well, can I take the cost of putting the pool in? So that's kind of a great example of, no, you can't. You don't need your pool for your business. So you kind of have to be reasonable in the approach. Or you might say, wait a minute, Tracy, I have a 1,000 square foot apartment and I use all the space. Okay, well, there's a formula where you take it and you be reasonable. So again, you may not be perfect in terms of how you come up with your percentage use versus dedicated space. And the CRA has acknowledged a few of those things during COVID because everybody's actually working from home. But it's kind of gets that example where, yes, absolutely, you should be able to deduct a portion of that, on your tax return.
That's a really good point too, just about sort of pandemic, that we really watched a government build a plane while it was taking off and make those amendments. And we saw them change, and some of them, did 180, and some of them, didn't. And I think that's another thing that sort of we need to take on board as individuals to get up to date from the CRA of exactly what the differences are, because they might not be the same as last year in normal tax time. Is that correct?
That's totally correct. And I think if you look there, there's a lot of guidance around those areas, office and home. Now I have to buy my printer at home. I've got if you're still using paper, wait a minute, I have to buy desks and things. So the costs of kind of working from home have gone up. Mm-hmm. The key for someone who's in their business by themselves is, again, reasonability, and does it really relate to your business? So.
Great. And that's really helpful. One thing I like about your chart of accounts as well, and I hope everyone has downloaded it, we've got it in the chat, is that you did include tracking car miles. And I know as an artist, a lot of times that's one of the things that we forgot to do, or it's something that doesn't occur to us. And then to make sure that you're taking account of that. And then also if you're driving the band around, or you're the driver, you're using your car, that's actually something that needs to be looked at as well. When you're tallying up at the end of a tour. That's not necessarily tax business, but that's something that I think is really important to keep track of as well. We've touched on this, just like what a difficult year this has been for self-employed, for gig workers, for musicians who weren't even allowed to do our jobs, to be in public, being in the gathering industry, and to be singing or, playing a woodwind instrument, God forbid. And it's been really hard for savings. And I know the saving for the future can be really, really daunting. But maybe talk a little bit about if RRSPs and how that can help at tax time.
That's a really good point, because there's a couple, if you don't have enough cash to pay your rent, then you're going to look at me and say, how can I possibly put money into an RRSP? So there's actually a couple hints I'm actually going to give you to say that when you have your limit for an RRSP, you can put it in at any point in time. So if you have a year where you're actually not earning a lot, I'm going to say don't put it into an RRSP this year. So the benefit of an RRSP is I get to take a deduction for it. So I save tax at my highest rate. So if you, Miranda, this year was really rough, but next year you sign a contract and you're making, 50 or 100,000, then you're going to get a tax deduction that's at a higher rate, maybe, 40, 54%, versus this year, if you're under 30,000, you won't get any tax benefit. And if you're between 30 and 40, you'll only get, maybe 15 or 20%. So that difference, that 30%, is actually cash you can put in your pocket later. So RRSPs are a really good thing, but timing your deduction and when you can put it in, so to be in a year when you're at a higher rate of tax, meaning you're making more income, is a really great tax strategy. But don't wait forever, because what happens with RSPs is all of the income you earn in your RSP is actually not taxable to you until you take it out, which hopefully is at your retirement. So it's also a great forced savings, approach. So if you say no, even though I might not get a deduction as much, or maybe you're making, my example was just in a year where you didn't have any income, but putting it away, and then you have interest on interest and you don't pay tax for a long time. Mm-hmm. So it's a good investment vehicle.
That's great. I know, especially for artists, and for a lot of us in the gig economy, actors as well. You might get a big movie or a big show or something, and that year is so different from the year before and perhaps the year after. So this is really helpful to know how to sort of mitigate risk and also try to take advantage of those times when there is a feast. I know everybody on this webinar is just going to have a great year this year and next year. Yeah. I just know it. And that gets into another thing, because once touring can really resume in the way that we know that touring was at one point, and hopefully better, we will be perhaps returning to the US. I know that complicates quite a lot of things with withholding. And I know that a lot of musicians, if they're on the call, would be familiar with the WBN form that we fill out for sound exchange, which is royalties. So that's a different thing than performing, which is a service. So just sort of high level, if you could, I think probably the answer is it's complicated, but if you
it is. But I'll try to give a couple hints. I think in terms of going to another country, is you got to think of not only our rules in Canada and what are the rules are in that country. So Canada taxes based on residency on your worldwide income. So you are always going to pay tax in Canada, whether you go and earn income in the US. If you're just earning royalties, you're not physically going to the US. So that's just a different type of tax that could apply. But if you're actually hopping on a plane and going to the US to perform services, then you have to wonder whether or not when you earn money in the US, is someone going to take US taxes off? So if you have US tax deductions, that's less money in your pocket today, that might be okay if you otherwise are still paying Canadian tax. But if you, for example, went on your concert and you've incurred a whole bunch of expenses before you went, and then you had a withholding tax only on the concert revenue, then what can happen is actually where you shouldn't pay any tax, you might find yourself ending up paying US tax. So you kind of want to make sure you don't get caught in the middle of those two, that you pay both US tax and Canadian tax. We call that a foreign tax credit, but it's kind of a bit of a complicated process. So what are my best advice when you're kind of going to the US to say, wait a minute, oh my God, I have no idea what she said in the last 3 minutes, which is what I get all the time. But if you're going to the US, is understanding when you're earning income, whether anybody is going to withhold tax from you. If you can get that money without any foreign taxes withheld, that is super awesome. If you have taxes withheld, then plan for it, because you might be able to make it zero versus kind of, paying that 30%, US withholding tax. The last piece I just wanted to highlight is you say, oh, Tracy, come on, I'm flying into the US for a day. Who really cares? I know I'm never subject to tax just for flying in on a day or two. The problem is, in the US, there is a federal tax, but each state has a different tax regime. And some are good states and some are not so good states from a tax point of view. So what I mean by that is I can actually fly into, maybe it's Florida or Texas and no one really cares. I just file a treaty base and say, hey, I was there, see ya, but I don't owe any tax. Here's my form. But if you fly into places like California and New York, they don't follow any tax treaties. So their rules are completely different. So in the US, I think it really depends. If you're on a concert tour across the US, then I'm going to tell you to make sure you get the right advice before you go in. If you're just a sole proprietor going down to play a gig, because that's where just ask a few questions before you go down so that you can understand whether there is going to be a withholding tax. The last piece I just wanted to highlight, I'm seeing this a lot now, is that providers in the US are treating you more of an employee, so rather than a self-employed, and they're taking off withholding taxes. So just understand in that contract that you're doing, if you're actually doing a contract for an event or a company, that you make sure that they're not treating you as an employee in that contract, and you as opposed to I'm not running my own business, I'm not an employee.
Right. That goes back to the incorporation piece, which we're going to get to in a minute. But if you're incorporated, as far as I understand, that's actually better because then you don't need the withholding tax does not apply.
Well, yeah, whether or not it applies, but the employer portion, they won't treat you as an employee. Right. So because a payment from a company to another company is never on a T4, but so it doesn't, that characterization of, income versus employee is irrelevant. You take it away from them. Mm-hmm. Yeah. Okay. And I just had that situation with a producer, and, it was a contract, and all of a sudden they're ready to pay the producer and they're saying, no, I'm going to withhold US tax. Well, you might say, okay, I don't really care because I'm going to get a credit in Canada, but the rules don't always work out. Right. It's like a formula. And if you don't hit the right spot in the formula, then you may end up paying both taxes.
Okay, that's so good to know. And we've got a few minutes left, but I want to get to these last 2 points because they're super important. One is, so HST, our friend, don't forget about me. Give us the 411 on HST. Okay, so my biggest point is HST is never your money. That's my biggest point. And if you're starting out, it's so tempting to say, oh my gosh, I have the money and it's in my bank account because I've charged HST because I'm on I'm running my own business. I'm going to tell you to put it away. Like, take it out of your bank account, and then it's never was your money and you can't get yourself into trouble. The other thing is maybe I just assumed the audience knew when you had to charge HST or not, but you'd say, hey, wait a minute, like what is this HST? So in essence, whenever you're providing services to other people that are performed in Canada, you'll have to charge a tax to them. And HST and value-added tax around the world is a very efficient system, because unlike provincial sales tax, where it's tax on tax on tax, and you have quadruple percentages relative to extra tax hidden taxes you don't know. It's a very good process, because what it means is that you pay tax, but if you're running your own business, you pass that tax on to someone else, but it's never really your cost. So that cuts to my second point, because quite often if you're starting your own business, I think we had about a quarter of the individuals on this webinar, is a big tip I want to leave you is that if you don't register for HST, you won't get the money back. So my second tip, even before you start earning revenue, is register for HST. So you can pick an annual filing, but the day after registration, if I then buy that Gibson guitar for $5,000 and I would have paid, $500 in tax, I get that $500 back. So my cost is only $5,000. Still a lot of money, but so it's but if I didn't register for HST and I didn't start earning income, my cost is $5,500. Like that $500 I don't get back. So making sure that you actually get yourself registered for HST, is good. There's a de minimis limit too, that you have to earn $30,000. If you earn more than $30,000 in revenue, you are required, to register for HST. Or if you earn revenue first before you incur expenses, then you are, deemed to be registered for HST. So those are the other. That's really helpful. I wish somebody had told me that when I was 25. That's really great. Okay, so then here's the big 5,000 Gibson ST question, which is when to incorporate. And so how to know, tell us.
Okay. So I'm going to talk about the tax reasons to incorporate. There may be other like legal reasons where you want to minimize, but I don't know if the audience really understands the difference between running your own business versus a corporation. So maybe I'll just touch on what is the difference. Is if you set up a corporation, it is treated as a separate person. So it's very, it's distinct from me, and it has liability protection. So what happens in your corporation, if you put your business in your corporation, does not necessarily impact your personal situation. So, quite often on the non-tax side, we might choose to incorporate. But I'm going to say it costs to incorporate. Then you have to set up a separate accounting system. So take what I just said in the last 5 tips and multiply it by 2. So you have administration. But the reality is a corporation isn't that beneficial to you if you need all of the expenses to pay your rent and hydro and food on the table. So I generally will say, unless you're forced to incorporate because maybe you need it to get some grants. I see that kind of coming in as a question. So if you're forced to incorporate, great, you have to do that. That's or if you're claiming production tax credits or something, you have to incorporate. But if you didn't have that impetus to incorporate, I generally say I would incorporate one after I've used all my losses and got startup and started earning revenue. And only if I'm going to be starting to really build a business and using that cash to reinvest in my business, as opposed to paying my expenses. Because if I'm just going to take the money out of the corporation, then I don't think you're really going to save much from a tax point of view.
That's excellent. I feel like that is a very tidy answer to a very complicated question, and I thank you. We've just got a couple more minutes left, so I just wanted to say to everybody that they can find you at your website. You've got a new business which you're starting. You will have a website soon, but you've got an email address, which is?
It's Tracy at digitaltaxcpa.ca or Tracy Jennings on LinkedIn.
Perfect. That's great. So if you had questions that you didn't get answered today or that you are interested in having answered later, then Tracy's available and to take your emails. And also you can send them to us at Music Canada as well, connect. So here's my last question, because this really applied to me as of January of this year, I would say, which is, if this all feels very overwhelming and someone hasn't set things up like this, is it too late and what do we do?
We just start today. Start today, Miranda. So I think the important thing is that we can fix up, what happened in the past. But if you just start doing some of the techniques that I gave you today, then you're immediately going to get the benefit of kind of that tracking, and there's no time like the present.
That's amazing. And also just to note that the Unison Benevolent Fund is there for everybody in the music industry. It does not just artists, but also it's there for one-time grants, as well as mental health specialists who can help you for free 24/7. And I know that, again, finances can be very triggering for a lot of gig workers, and it's been a really rough go. But we really appreciate your wonderful expertise, Tracy. Thank you so much.
Thank you so much. And I'm going to say to all the artists, I love everything about it, what you're doing. So the passion that you bring, I'm going to say, keep on bringing the passion, because we're all, those who are not as fortunate or talented, just love to enjoy it. So thank you so much for the opportunity.